Hey, what's going on, folks? My name is Mo Al-Hamadi and welcome to thebusinesslounge.com. We're going to continue our investing series with today's video on investing in real estate. I know that investing in anything from stocks to bonds or real estate can seem kind of daunting for some of you out there, but like I've said before, it might just be because you don't know what you need to know. All you really need to do is educate yourself, and the more you do that, eventually you'll get rid of that fear and anxiety, and in terms of real estate, hopefully you'll get to a point where you know you're purchasing a great property that will hopefully pay you a great return. Of course, if you're just planning to get online and buy the first rental property you see, this could end up being something very negative for you. But if you take the time to do your research and really understand how to get a good tenant, how to find a good management company to help you run your property for you, and probably be able to get you good tenants as well, and just deal with all the smaller hassles in maintaining and handling a property, there should be nothing for you to be fearful about investing in real estate, as long as you have the right systems in place. This is going to be a very brief explanation of investing in real estate because, as I said, this series is meant to be for people who are beginners to investing or have been thinking about investing but don't really know how or are afraid and don't know where to start. But hopefully by the end of it, you'll have the understanding and confidence to at least begin looking into real estate investing if that is an option for you that's available. Otherwise, hopefully you'll be better prepared for when that day finally does come and it won't be such an overwhelming experience for you. So let's go ahead and get started. But before we do, if you're new to the channel, make sure you hit that subscribe button and turn on your notifications so you know whenever I come out with a new video. Also, if you like this video, please do give it a thumbs up so YouTube can share it with more people looking for information like this. Because at the end of the day, I want to be able to help as many of you out there as possible, just like so many others out there have helped me as well. All right, let's not waste any more of your time and get to this. Welcome back, guys. Alright, so I truly believe one of the best investments you can make is in real estate. And one of the biggest reasons is because, as it turns out, real estate pays you in 4 different ways. How amazing is that? Now, before I go any further, I just want to be clear that most of what I'm referring to is in terms of real estate investing in the United States. So although you might find different laws and regulations, you'll find that most of everything we talk about here today is applicable to wherever you're living. But you'll obviously want to look into the details pertaining to your specific location more thoroughly when that time comes for you to invest. Now, as I was saying, real estate pays you in 4 different ways. And in this video, I'm going to break down for you those 4 ways that you make money from real estate investing. I'm also going to show you how and why you should invest in real estate. Throughout this video, so we can put things into perspective for you and explain things a little easier, I want you to imagine that you have a property that's worth $100,000 and you're buying it with a 25% down payment, meaning you've put down $25,000 of your own money to purchase it. So the first way you can make money from real estate is through what's known as cash flow. Essentially, cash flow is when you purchase a property, and obviously with that property comes expenses, right? So every month you're paying your mortgage. Well, that's if you're getting a loan on your property, which I suggest is the way that you do it, like we are in our example. And so you're paying your mortgage, your utilities, and a bunch of other random things you need to be able to cover every month in expenses. But if you're renting out the property correctly, then every month you should be getting cash flow, where you have your expenses going out and your rent should be enough to cover all of the expenses and still leave you with enough money left over that you'll be able to get as a return. A lot of people think this is the main or only way you make money by investing in real estate, but in reality, it's just one of the different ways. It's a simple and more favorable way to make money because you're getting a check every single month, where again, all of your expenses go out and then your cash flow comes in. So hopefully that one was easy for you to understand, and we can move on to the next way you can make money through real estate, and that's something that's known as principal paydown. Now, you only get principal paydown if you've purchased your property with a loan, so not all real estate investors are eligible for it. If we use our example where you've purchased a piece of property for $100,000 by putting down 25%, so that's $25,000, that means that you've borrowed $75,000. Now, this means every time you pay your mortgage, a portion of your mortgage will go to the principal and the other portion will go to the interest. The interest, of course, is an expense that you've lost. But the principal is actually money that's tied up in your property. You can kind of look at it as having a savings account, but it's also another way that you get a return. When we look at cash flow, we're actually taking the entire mortgage out as an expense, when in reality, you get principal paydown every month. That's money that's getting locked up in your property as if it's a bank. And so this is another way you get a return on that money, because if you ever decide to sell that property or refinance it, then you can take that money out that you've been consistently paying in the form of principal paydown. The next way you can make money through real estate is really interesting. So the first thing you need to understand is that if you have cash in your savings account or in your pocket, every single day that cash is going down in value. This is what's called inflation. We don't need to get into the details of it right now, but it basically means that your dollar is becoming worth less and less every single year. Now, in terms of real estate, this relates to what's known as appreciation. And although inflation isn't the only thing that creates appreciation, but when your dollar is worth less due to inflation, then property ends up costing more. And this is one of the best reasons why investing in real estate is a great idea. If you've got cash and you put it into real estate, inflation doesn't become a negative thing for you because your money is safe in real estate. So if your dollar is becoming worth less and less due to inflation, it doesn't matter if that dollar is tied up in real estate because the real estate is becoming worth more. That makes sense, right? This is the concept of appreciation, that all properties should go up in value every single year, and on average, they go up in value anywhere between 3 to 5%. Now, just to be clear, that entire amount isn't just due to inflation. With appreciation, you do benefit from inflation, but also in general, property goes up in value, and that's one of the best reasons to invest in real estate. You know, when purchasing a piece of real estate, if you do it correctly, every single year, it's going to go up in value, and it will do that faster than the rate of inflation. That way, you're not only making up for inflation, but you're also making more money on the top. Another thing that is great about appreciation is if you purchase a property with leverage, which means you use a loan to purchase that property. So let's go back to our example where you purchase a property worth $100,000 and you purchase it with only $25,000 cash down, and then get $75,000 on loan. What this does is give you the ability to control $100,000 worth of real estate, even though you only have $25,000 worth of cash. That way, if your property is going up in value 3 to 5% every single year, you're going to take that 3 to 5% and multiply it by 4 because you only paid for 1/4 of that property. So when you're getting a 3 to 5% appreciation on a property, in reality, it's more like 12 to 20% because you only have 25% of that property covered with your own money. And this is another main reason why so many people invest in real estate, especially if they're using leverage, which I would suggest because you obviously can get a huge return through appreciation. So now you have cash flow, principal paydown, and appreciation, which are all ways that you can make a return on your real estate investment. Remember, this is every single month, and if you add all of these up, more often than you think, you can get as much as a 35, 40, or even sometimes 50% return on your initial investment. So that means if you've put down that initial $25,000 on that $100,000 property, you can get up to 30 to 50% return between all of these on that $25,000. And this is why real estate investing is one of the best investment options available for you. Now, the last way you can make money through real estate is with tax benefits. I know a lot of us get iffy and anxious when we talk about taxes, but the good news is that taxes in real estate are very simple. The first thing you need to know is that any of those expenses we talked about earlier, you get to write them off. This is great because you're not paying tax on the money you made, but then spend on those expenses. This includes the interest or any other expenses like renovating or taking care of anything on that property. But that's not all. Thanks to the government, you get this great thing called depreciation. And what it is you get to take your property, and again, I'm talking about in the US, but you get to depreciate it over a 27.5-year period. Now I know you might be wondering, why is the government letting you say that your property is going down in value if I've already told you that properties go up in value over time? And honestly, I've looked into this, and the closest thing I've got to an answer is, I don't know. That's just the way it is. So the government is actually incentivizing you to buy real estate, and it's a really great way to take advantage of this kind of investment. There's also something called accelerated depreciation, also known as cost segregation, and what this does is give you the ability to speed up that depreciation. So if you need to, you can actually depreciate that property faster than that 27.5-year period. You do this by depreciating small things in that property on an accelerated schedule, whether that's a 3-year or a 5-year schedule. So what this ultimately means is that with the depreciation and with those expenses, you could actually get to the point where all of the money you've made on cash flow, you won't have to pay any taxes on. Also, your appreciation and your principal paydown, since it's locked up in the property, you don't have to pay any taxes on that either. So if you never sell that property, you'll never have to pay those taxes. But even if you do end up selling the property, you have something that's called a 1031 exchange. And I won't get into the details of it, but ultimately what it does is allow you to sell the property and move that money into a new property without paying any taxes. So the bottom line is, if you haven't realized it yet, is that the tax savings are huge. And that's why this is the fourth way you make money, because think about it. You could essentially go your entire life without ever paying anything in taxes on your property, other than property tax, of course. And that is just another expense you get to use against your income, so that you don't have to pay any tax on those returns that you're making from your real estate. So I hope this was an easy video to follow and you have a better understanding of real estate investing and how you can profit from it, as well as how you can use leverage to your advantage. Of course, as with any kind of investment, it can be nerve-wracking and a huge risk, but like I told you before, especially when talking about real estate investing, if it's done right and you have the right systems in place, like the right property management company that gets you the best tenants for your place, you can systemize pretty much everything so you don't have to deal with any of the hassles and struggles of dealing with and managing a rental property. Even after paying the expenses of a management company to take care of all of that, you can still make a great return. So don't let people talk you out of any opportunities you have to invest in a property that you know has potential, and that you know you can put your systems in place to help you maximize your profits with the least amount of effort. All you have to do is educate yourself and really understand how real estate investing works, and just do your homework and due diligence when selecting a property that will give you a good return. Don't just jump on the internet and buy the first rental property you think looks good. That could end disasters for you. Do it right and you'll get that cash flow, the principal pay down, the appreciation, and the tax benefits. And hopefully, all of that will add up to a passive investment, consistently giving you a great return on your money. If you guys enjoyed this video or found it valuable to you in any way, please give it a thumbs up so YouTube can share it with more people looking for information like this. As always, thank you for sticking with me to the end. I know that's time you're never getting back, so it is much appreciated. Also, if you're new to the channel, hit that subscribe button and click on that little bell so you don't miss any other videos I put out in the future. Until next week, you guys take care and I'll see you soon. Bye bye.